Hi everyone, thank you for tuning in to this video by Family Life Financial Planning. I want to give you a real quick answer and help you out with a little bit of your investing questions. One of the questions I get a lot is how much can I expect as a return? So I just want to kind of walk you through a great way to kind of answer that question and see what kind of ranges you can expect from your investments over different periods of time. Because the real answer to that question isn't so much what funds you put into it, but what amount of time you can have for that money to grow. So all the numbers I'm going to show you come from the JP Morgan Guide to the Markets from June 30th, 2020. I'll put a link to that down in the show notes so you'll be able to, in the video notes, so you'll be able to go back and you'll be able to see the source data if you would like to. Just wanted to clean it up and make it a little easier for you to view. So if you were to give some money to any investment today, really what we're talking about, the stock market, in this case, if you were to put money into the stock market today and let it sit for exactly 1 year and no more time, just 1 year, then over the history of the market, the best 1 year period was 47% growth. The worst 1 year period was 39% loss. And this doesn't go back forever, it goes back, I believe, 50 years. So you can see somewhere between 47% more money or 39% less money, just depending on what the market does and when no one has any control over it. Now, at the same time, if you take that same type of money and instead of giving yourself 1 year, you give yourself 5 years. So you stretch it from 1 year to 5 years, then your average 5-year period of time, your average annual growth could be as high as 28% per year versus 3% loss per year. So you can already see that over going from a 1 year period to a 5-year period can drastically affect the amount of risk that you take on and make your investments a little more conservative just by having more than 1 year to do with it. So what if we extend that 5 years out to 10 years? You see a little more conservative, a little less. I mean, this is still the stock market, so it's still growth oriented and still has some risk involved. But you see that the worst 10-year period was only down 1% per year. So that's really, really good because that means that you don't have a lot of risk once you get out to that 10-year period. You may not make a lot, but you don't have a lot of risk. But on the good upside of it is 19% per year is the average amount of growth per year. So if you pick up 19% every year for 10 years, you're killing it. This is a great 10-year period. Okay? And my favorite example of it is when you look at 20 years. If you go out 20 full years, then what you see is the worst 20-year period had an annual rate of return of 6%. So if you give us 20 years time, we're going to make you, on average, no less than 6%. Now, we might end up facing the worst 20 years that we've ever seen, so maybe that's not the bottom, but statistically speaking, it's highly likely that it is. You may also see as high as 17%. So there's a really good chance that if you give us a 20-year time period, we can get a pretty good projection. Averages for 10 to 20 years in the investments is going to be somewhere between 10 and 11% per year. So when you want to know how much money or what kind of returns your investments are going to have, the real key to it is just asking the question of how long can you invest. Now, if you're looking for someone to help you out with your investing or help you out with your financial planning, you can give us a call or reach out to us at our website. The website is www.saveforyourfamily.com. I'm Michael with Family Life Financial Planning. I hope you had a great day.